Okay, good morning, everybody. Thanks for joining us at the Enterprise Lab Startup Scale-Up Summit. I'm Steve Parker of Steve Parker ICD, your host for this session entitled Supporting the Demand Side of Finance. We've heard a lot about the supply of finance. If you're starting up or you're scaling up in the news, we thought we'd bring two real experts in to talk about the demand side. What do you really need? What is and isn't available? I'm pleased to be sharing my fireside this morning with Lewis Stringer, who's the Senior Manager of the UK Network Team of British Business Bank, and Darren Hart, who's the Head of Growth Capital, Corporate and Commercial Banking for Santander UK PLC. Good morning, gentlemen.
Good morning, Steve.
Now, Lewis, a number of people will probably be familiar with the British Business Bank, but for those of us who aren't or who need an update, tell us all about it and what you do, please.
Thanks, Steve, and many thanks also to Enterprise Lab for inviting us to take part in this week's Startup Scale-Up Summit. I thought it was quite interesting to, I'm sure there's going to be lots of presentations around finance from various finance providers, of which we are one. But I thought it was a useful opportunity to talk about the demand side. So thank you very much for the opportunity of not only examining that, but also talking a little bit about the British Business Bank. Next slide, please. So what is the British Business Bank? We are a government-owned economic development bank. We have been formally operating for 6 years. We went through a state aid process for 2 years before that, and we had a number of smaller organisations that became amalgamated. What do we do? Well, we basically work with government and finance markets to improve those markets and make them work better for small businesses. In simple terms, we identify gaps in the finance market and work with providers and government to address them. Thank you. Next slide. So we have 6 key objectives, and really it's around providing SMEs, typically earlier stage SMEs looking to grow with different options, to create a more diverse finance market as a result of that, to look to address some of the regional disparities that exist across the UK around access to finance, to encourage and enable SMEs by providing them with more information around what those options are, and then to be the centre of expertise for small business finance in the UK for government. And we are used as a sounding board by government and the finance markets. And last but not least, you'll be pleased to know, Steve, that we don't cost you anything because we don't give grant monies, but we provide debt and equity. Actually, who we work with, we expect them to return the money to us and you as taxpayers as well. Next slide, please. We do that through a range of programs, and interestingly, two of those 3 pillars are startup and scale up, but we're also able to support businesses that are still beyond that, still growing, but still experience problems in terms of accessing finance. Some of these programs and projects and initiatives you'd have heard of, some of them you won't have, so they're very internal names and titles, but they're really aimed at putting more money into the marketplace to address those gaps in the marketplace. We tend to lend and invest through what we call delivery partners. Those are commercial funders. And pre-COVID-19, we actually worked with over 130 delivery partners, ranging from high street lender, such as Santander, all the way to some of the smaller, more alternative finance providers that have come to the fore over the last 10 years or so. Next slide, please. I guess the bank has become more known by the marketplace because, unfortunately, since the end of March, we've been heavily involved in the delivery of government's COVID-19 initiatives. So phrases like B-Bill, C-Bill, CL Bills and Future Fund now trip off the tongue and are well known by certainly our finance providers, if not the businesses that have benefited. And that's taken us from a £9 to £10 billion business to a 75 billion pound business, over the last 6 months. So those schemes now are supporting a significant proportion of the UK SME marketplace. A little bit of information. I think the slides will come out to all the participants separately, so don't worry about scribbling those down. Next slide, please. So for the last 6 years, the bank has been very much involved in the supply of finance, But actually, it's become increasingly aware that as important as the supply of finance is the demand for finance and the ecosystem supporting SMEs to access the finance they need to grow, to start up and to scale up as well. So my role changed 2 years ago to work in what's called the UK Network Team, and the role of the UK Network Team, of which I am one of 13 senior managers across the UK, is to work with providers, organisations, key intermediaries in our respective regions, to look at what's working well and to build on that, but also to address some of the demand and ecosystem issues that invariably exist, particularly outside of London and the South East. Next slide, please. So what does that mean? So in the 18 months prior to the COVID-19 pandemic, we undertook regional surveys with key intermediaries to find out actually what was happening in the marketplace and how SMEs were responding to the various programs that were being put in place to support them. And more recently, we've done some very bespoke surveys to reflect how things have changed over the last 6 months. Key findings for us, clearly, demand for finance has been very much centred around those 4 initiatives I talked about earlier, CBILS, CLBILS, BBILS and Future Fund. But actually in terms of equity market, it's a more confused marketplace than it previously was. So a lot of certainly the early stage equity providers and angel investors have retreated from the market because of levels of risk. And that's left a number of businesses that were looking to start up and scale up and looking at equity finance as the means to do that a little bit high and dry. So we're looking at ways in which we can do that. One of those is the Future Fund. But underlying that, Steve, what's really interesting for us is that pre-COVID, you could argue that the supply of finance was not actually an issue, that there was a lot of finance out there and lots of options, increasingly so. But actually, the issue was more around the demand and the ecosystem, and actually making businesses aware of those options and preparing them to maximise those options as and when they linked up with them. So the surveys are focused on 3 key areas: demand, supply and ecosystem. Next slide, please. I'm not going to touch on too much in terms of each of these next 3 and final slides, but again, one of the key issues you'll see in terms of each of them is the awareness and understanding of finance options and the increasing need for businesses and SMEs to be aware of the options and what they need to do to put them in the best position and case to access those different types of funding options. Next slide, please. In terms of the supply side, that remains critical in terms of access to early stage, particularly equity and alternative finance. Next slide, please. And finally, before we come on to the fireside chat, the importance of investment readiness, working with intermediaries to polish the business plan, to position it, and then to present it in the appropriate way to those finance providers. Thank you. Next slide.
Okay, thank you, Lewis. That was really good. Just clarify for me and any of the attendees, what's your meaning of ecosystem? You referred to that a couple of times in your presentation. Just clear up for us what ecosystem means.
Yeah, thank you, Steve. It's a word that's slipped into the vocabulary a little bit, hasn't it? A bit like words like pivot, and if you're in the industry or in the sort of area that I work in, it becomes second nature and you throw it out. But ecosystem for us means organisations that effectively support businesses, whether that can be on generic business support or around accessing finance. So typically it's banks, because banks are still an advisory service, accountants, corporate finance advisors, public sector support providers such as LEPs, growth hubs, chambers, etc. Right,
great. That clears it up, because the word eco, as you say, has slipped into all sorts of industries, all sorts of sectors, and I wanted to make sure we completely understand it. Darren Hart, Head of Growth, Capital, Corporate and Commercial Banking. Blimey, that sounds a busy old day in the office, Darren. Tell us about what you do and a little bit about Santander.
Yeah, it's a great title. I made it up myself about 9 years ago when I founded this business at Santander. And really, this was coming out of the last financial crisis. There was a recognition at that point that access to finance for high growth SMEs and scale-ups was very difficult, whether that be debt or equity. And I agree with Lewis. I think access to finance probably less of an issue now, although institutions might have slightly different approaches and different appetites given where we are. But I'm inclined to think that the bigger issues probably still things like access to talent, access to new markets, but very stably we've been providing debt growth capital to high growth SMEs for the last 9 years or so. And what that means is effectively supporting smaller high growth SMEs with their value creation projects. So that's not just things like acquisitions and buy and build strategies, but very much more organic growth, investing in people, new product development, research and development, rollout strategies, internationalization, maybe even a bit of exit planning, but anything that creates value in the business. And we're doing that very largely with a non-amortizing debt product, because we recognize that the businesses need the value of that cash in their business to achieve something before they pay it back. And we're working, I should say, in very many cases with entrepreneurs. So not just businesses that already have institutional backing. A lot of our clients don't. So very wide range of clients across a wide range of sectors. We still think there are winners in every sector, and we're there to support them.
Yeah, really interesting. I guess accessing finance and going into it is a mindset thing for many people, particularly those that are starting off. Some of them might be worried that debt is bad and it's not something that they should get into, or that they might feel as though they're losing control of the company. But to both of you, that doesn't have to be the case, does it?
I think from my point of view, if I can come in very quickly, Darren, just to respond a little bit to Darren. Darren's quite right that pre-COVID, increasingly from 2007, 2008, in terms of the shopping list or the priorities for a business, access to finance had slipped. And at any one point in time, it was probably fifth or sixth out of the list of whatever number. And again, Darren is quite right that invariably that was topped by things such as management teams and capabilities, and also the availability and access to a talent pool of staff. And dare I say it, increasingly the B word, Brexit. Post-COVID, I think what that's actually resulted in is it's actually shown an underlying lack of knowledge around finance. Let me explain that. And that's been the case that pre-COVID, any survey that you did of SMEs, 75% plus of SMEs would say, I don't want finance. I don't want to take that debt. I don't need equity. I'm going to self-finance. I don't want a third party involved. I don't want to put houses at risk, etc. But actually, sadly, that probably was the expense of financial management and understanding options and how finance can work. And what we're now in a situation is that we're very quickly getting to a stage where 75% of all businesses need finance as a result of COVID. And some of the initial issues, but not all of them, that were certainly experienced in end of March, April, May, June, was a lack of preparedness for businesses from a financial management point of view. And I think that's continued. But coming on to your question, Steve, totally agree with you, particularly outside of London, South East and some of the core cities, there's a mindset issue. There's a mindset issue around taking external finance and giving somebody a share of your loved business. And I think that sometimes in certain areas and certain sectors takes away from the potential ambition and aspiration of those businesses and therefore growth. Always the case, and there's some great examples, but for a lot of businesses it does.
Darren, your thoughts on that?
Yeah, if I just follow on there, I mean, there are different sorts of finance, and we can very broadly categorize it as debt or equity. Let's leave grant finance, grants out of it for now. And both have got relative advantages and disadvantages. Fundamentally, equity, yes, equity, you will have to give up some of your business and dilute your ownership and maybe an element of control. But I find that a lot of management teams are really progressive when they look at that, because they recognize that that can really spearhead very significant growth. And when we talk about growth, we mean value creation fundamentally. So, it comes back to that old adage, do you want to have a bigger piece of a smaller pie, or a smaller piece of a bigger pie. And if that smaller piece is bigger because your equity has allowed you to grow more significantly, then that's well worth thinking about. But the cost of equity isn't the share of your business today, it's the share of the value that you create up until that exit. The other good things about equity, and I'm not here to advocate equity because I'm a debt provider, I'll come on to that very briefly, but equity typically will bring somebody onto your board, probably in a non-exec capacity. And you shouldn't be resistant to that, because they can bring skills that you might not have. It might be someone who's already done a rollout or a buy and build strategy, or someone who's run a very much bigger business in your sector, or who brings contacts. That's a good thing. Debt, on the other hand, doesn't need you to give up any element of ownership, but you have to pay debt back. Comes with an interest cost, probably comes with financial covenants that mean that every quarter you'll be sharing your performance details with the bank, and the bank will be looking for you to be making progress. It will have some events of default, but really the debt package that you would put in place ideally should be with the bank and yourself being completely aligned around your plan. It's not for the bank to say what the plan should be, and being as one around an upfront belief in the deliverability of that plan. And in that case, with suitable headroom and sensitivity analysis, my view is that debt can be a very cost efficient form of capital to underpin growth.
So one of the differences between the debt and the equity then is that there's kind of less outside intrusion into your own business. Presumably you don't need a non-exec director or somebody put in on the board if it's debt rather than equity. Is that correct?
Well, it is. I mean, I see very few downsides to having a non-exec director, but it would be unusual for a bank to appoint one. And there was a comment earlier, I think it might have been you, Lewis, saying, banks are advisors. We're actually very careful not to be advisors from a regulatory point of view, but we do want to be trusted partners. So for us, it's great to spend lots of time with management teams, previous to this, visiting businesses, now largely on Zoom or Teams, but getting to know the individuals, getting to know the business, the market in which it operates, the defensibility of the products or services. And then what we can do is say, look, here's a range of options that we can put forward. And we've come across businesses in the past in your situation, and some of them tried this and this didn't work so well, and some of them did something else and that was better, and we can put you in touch with them and you'll be doing your own networking. So it's very much a collaborative partnership approach to get to an agreed best way forward.
Yeah, I guess one of the other, being devil's advocate, because I'm on your side really on some of these things, is just the thought that, God, it's really hard work to put together something to get financed. I haven't got time for that. Oh, blimey, it's going to take me ages. So if somebody was looking to get finance and help from both of you guys, how onerous or easy a task is it, and how simple can you make it for them?
Should I go first again?
I can go in very quickly, Darren, because from our point of view, we are a wholesaler of funders. We're not a business support provider in that respect. So I think it's slightly a mindset thing again, Steve, if I'm being brutally honest. Even though we are a wholesaler and we don't allegedly deal directly with SMEs, or not supposed to anyway, for partly the same reasons as Darren, then actually where you do, and you often do, is you get a very quick steer from a very initial chat, usually with a founder or an entrepreneur, about their mindset and actually whether or not they're open mindset. And what I mean by that is that if you have somebody immediately coming to you and saying, well, it's going to be a lot of work, isn't it? Without seeing the reason for doing it, and actually seeing the wider reasons for having certain systems, processes, procedures, dare I say, business plan, financial management in place, then that's stuff they probably should be doing anyway, irrespective of whether or not they're going for finance. So again, it comes down to very much a mindset thing. We do investment masterclasses, for want of a better phrase, with partners. And we often get SMEs on the panels for those investment masterclasses, and we ask the question, it's like taking a test, isn't it? You submit the application, you pass or fail, and if you fail, you probably never find out why. And it's not. It's not. It is with potentially some funders at certain parts of the marketplace, but the likes of Santander and certainly all the delivery partners that we deal with, do you know they want you to be successful? Not just for reasons of getting their money back or getting a return, but they want you to be successful and they want to work with you to support that. And organisations such as Santander and other high street lenders do actually have programs to directly support businesses and work with them to do exactly that. And I'll shut up there and hand over to Darren.
Some great points that I would make as well. I mean, we have our breakthrough program, which my growth capital business effectively is the debt part of, and certainly that's how it started. But we have a big international team supporting SMEs breaking into new markets. But what I would say fundamentally is businesses don't need to have a perfect glossy business plan to start with. In many cases we start with a blank sheet of paper and say, look, tell us what your aspirations are, what are your ambitions for this business, and where do you see the hurdles, and work out what it is they need. It might just be working capital, particularly at the moment, that's being stretched. It might be asset finance for a piece of kit, but it actually then might be something akin to what I was talking about earlier, which is investing in the business. And a lot of our businesses inevitably are asset light. That's very common these days. So we're not lending against assets and security. We're lending against a business's ability to thrive and grow and ultimately pay back our debt. Exactly as Lewis said, our interests are completely aligned, but we like that collaborative approach of sitting down and coming up with a common solution. But I can't pretend that it doesn't take a bit of time. Probably the quickest deal we've ever done from first meeting to drawdown is probably 8 weeks, but that's pretty unusual. But we will be, as I'm sure other banks and all other institutions will be, in regular touch with management teams, and there's no radio silence. We like to keep the ball out of our side of the courts, so when you send something back to us, we work on it, we come back to you. We're very much open for business, even though these are tough times. We've seen a huge number of very resilient businesses, and we've certainly taken advantage of the CBILS program that Lewis was advocating, but we're coming out of that now, and even businesses that have needed some short-term liquidity support are thinking about growth again, and we're very much there for them.
But it's important, isn't it, Darren, that whether formally or informally, whether in a written plan, glossy or not, that businesses have gone through a thought process and actually thought, what am I doing? Where am I going? And what role, if any, can finance take in terms of doing that? Because all too often, it's not a chicken and egg situation. It's not, I'll go for finance, but what do you need it for? It needs to be part of a clear thought process. Otherwise, it becomes an issue sometimes down the road.
Absolutely.
Yeah, I think one of the great things that we're talking about here, because I think there was the perception as well that I'd best not try and get one because, all loans are based on a